ready to go. We've got quite a few participants. If you guys do have any questions, please do not hesitate to either raise your hand, put it in the Q&A or the chat, and we'll go ahead and I'll be helping to monitor that. And Vince, go ahead and take it away if you
Right.
want to introduce yourself.
Thanks, Birgitte. We had a couple of technical difficulties this morning, but they're taken care of now. And that's the love I get from Workamajig. Thank you all for the opportunity to speak today. And while Birgitte and I go back over the years as well, much of what all of you are seeking today is to use the system better. So we will talk firstly about a bit of a background, then a framework, and then we'll get into the 6 key areas in question. As an agency financial consultant, I care very, very, very deeply about my clients. And I have this motto that if you want to learn, I am prepared to teach. And for those of you that have not been in the business that long, this year marks my 38th year of being in the advertising industry as a CPA. From working at a 250-person shop as the head of finance to my travels coast to coast, including Alaska, I've seen some really unique accounting reporting with agencies over nearly 4 decades. And for today, I think this is, Birgitte, I think this is also a first where you've had an outside accounting person speak about the program and render their perspective. Is that reasonably fair? And if she's not immediately answering,
I apologize. My whole thing went away, and so I had to get you back again. So I apologize. What was the question?
I think this is the first time where Workamajig has had an outside accounting finance person speak to the intricacies of any number of the accounting modules in the program,
Yes.
more so from an outside perspective. Is that fair?
Yes.
Great.
Definitely.
So we're going to talk about a bit of a framework for today's webinar. Today's webinar is a little accounting 101, but in the context of the ad agency world. And what I absolutely love about this business is that we as agents on behalf of the client also have vendors to deal with, and we are effectively stuck in the middle, which is why it's called an ad agency. And with all of that comes a number of unique transactions. There is no textbook that I'm aware of in the Western world that talks uniquely about the accounting for ad agencies. And for those of you that are independent on your own, sometimes it's a struggle to get an authoritative voice that can give you the right guidance, or you decide to take matters into your own hand and you recognize revenue however you feel like recognizing revenue. But that's for another day. So my experience in the past 3 decades, I've seen the following finance people in the ad agency world. Number 1, finance people have an agency background. Number 2, finance people have an agency and finance and accounting background. And number 3, finance people have an agency, finance and accounting, and software background. The trifecta is what I love, love, love. And as I've been in this industry for nearly 4 decades, it does take a bit of time to get to the mecca of having the trifecta. And when you are using a fairly sophisticated program that was built for the industry, and you're not necessarily coming in with the framework of 2 of the 3 skill sets, it can possibly be overwhelming. So for those of you with all 3 skill sets today will be more about reassurance, and chances are that you are likely deep into management reporting instead of just balance sheet and income statement. And quite possibly you are using the Google financial link for even more advanced reporting. For those of you that are using the first two skill sets, so that have the first two skill sets, it will be more about the nuances in accounting in the ad business, complete with how Workamajig's accounting module has been written for the ad industry. For those of you with just an agency background, chances are that you're using the billing and purchasing modules with some use of the accounting module where you possibly hive off the month-end reporting to an outside public accounting service or a part-time CFO. Chances are they are and do not work with the program and are not completely sure of the accounting practices in the industry and often execute journal entries in the control accounts. And I'm not being blanket statemented when I say that. I have just seen a lot of that, and it's because they don't know what they don't know. And more than anything else today, we are looking to enlighten. I've had one quick question. Birgitte, is there any chance I can turn on my camera?
Sure. Yes, I was going to say you are listed as a host.
Yeah, and whoever has asked, WW, that's Workamajig Webinars.
I was going to say, I think that's Esther.
If it is Esther, I'm unable to turn on my camera. We pause for station identification. In the meantime, while Birgitte is trying to figure out how to turn my camera on, once again, we'll talk about the framework. So we will have advanced users today, we'll have intermediate users, and we may have people just getting into the program and focusing on making sure that they bill their clients, making sure that they post their job costs to projects, ensuring that they post the journal entry based entries like salaries and bank service charges. Any luck with that so far?
Yes, you
Birgitte?
should be able to share your camera now.
Okay, great.
There you go.
Thank you. I purposely wore red today. Not to say that it suggested anything negative, but I love the color red. So with that being said, there are a couple of other support areas I wanted to just to mention to you where all of you have access to the online support.workamajig.com. There's a section in there called FAQ, and the FAQ section breaks down by module a lot of questions, and I somewhat chuckle sometimes because when it says frequently asked questions, I look at some of these questions and they look like more remotely asked questions than FAQs, but they are very helpful for you that have a little bit of time on your hands, want to dig into the program a bit more. And for those of you that want to have a more serious conversation, you guys can reach out to me at your leisure. That being said, on the bottom right-hand side of support.workamajig.com, I love engaging with people in support with questions whenever I have an opportunity, and I've got a live person responding to me in the form of an avatar. So when we first posted this webinar, I was wondering who on earth would show up and listen to me, let alone listen to Accounting 101. And a month ago, I was talking to the owner of an agency, 40-person shop, privately held, and said, after a one-day review, I said, your balance sheet is full of time bombs in it, and I wouldn't believe that income statement if I were forced to. And you're going to have to clean this balance sheet up, get to know it a bit better, so that you can actually believe in your income statement. And the owner actually said to me, I don't need to own that balance sheet. That's up to my controller, director of finance, et cetera, et cetera. And I think that was a bit of a code for, I don't even understand a balance sheet. I want to understand the income statement. And that led me to whose responsibility is it really to understand the balance sheet? Because that's where all the time bombs lie or don't lie. And you, as the person preparing the financials, will be, I will say this professionally, judged on the income statement one way or the other. And I have seen all kinds of income statements, Brigitte. Incomplete income statements, misallocated income statements, certain income statement items actually sitting on the balance sheet. And it's been fun to see how people have treated both the balance sheet and the income statement. So today we are going to focus on 6 principal areas of that income, of that balance sheet. Even I said it wrongly there. In order for all of you to have a way more generally accepted accounting principles based balance sheet and an income statement, so that you can confidently present to the owners, leadership, senior management, even yourself, to say, okay, I either lost $100,000 in the month of January, or I truly made $150,000 in the month of January. So Birgitte knows that my absolute favorite balance sheet section is work in process. And I'm not doing this from a highest to lowest standpoint. I'm doing this from a most important standpoint. Our most expensive expense on our income statement happens to be salaries and benefits. And for those of you that have 1099s, contractors. One agency that I'm dealing with right now has 60% dollar-wise contractors and 40% employees. Well, they should absolutely know about what's unbilled every month for their costs. I'll use the example of an agency where they not only do not use work in process, but they also recognize revenue in a most unique way, in a completed contract way. So that if a job goes for 6 months and it starts in September, they don't book 1 penny of revenue in September, October, November, December. And let's say it ends today. And let's also say that the job is $120,000. The entire project is billed today. Revenue hits for $120,000 today. Oddly enough, salaries were posted September, October, November, December, and January, but that's not really part of an understanding from this agency. And their philosophy is that they were taught some years ago by an outside accounting person that said, you're only recognizing revenue on the day that you finish the project. That is A, incorrect. B, it also violates ASC 606, and C, it also violates the matching principle. What does that have to do with the price of sliced bread today? When we have time, billable time booked by virtue of timesheets in September, October, November, December, we should be using this amazing module in Workamajig called Work in Process. And that way, we can ensure that we've actually recorded revenue for each of those months in question, and not showing all of the revenue that we've earned in one client invoice in the month of February. Unbilled time is as important as unbilled production costs, unbilled media costs, and for those of you that use miscellaneous costs, unbilled miscellaneous costs. In order to have work in process be used, you actually have to set it up, make sure that you are posting to the right balance sheet account and commensurately income statement account, because the minute you do post work in process, you are going to debit an asset account, and then you will credit a revenue account. Most often I call that revenue account an unbilled revenue account, and it sits nestled way down below on the revenue side instead of up high where your billed revenue is located. Your work in process is as important as all of your other current asset accounts. And what is troublesome with a lot of agencies is that I have philosophical conversations with people saying, well, we don't know if we're going to collect this money, let alone bill this money, and so I don't want to turn work in process on. And by not doing so, we're back to a phrase that I learned from Workamajig years ago called the way. And if we decide to veer off the way, you're not going to get the proper, accurate, complete information that you would like to by not using the way. And part of using the way is making sure that you are recognizing revenue when you have earned it. And if it's for September that you've got $10,000 of billable time on that $120,000 estimate, you post $10,000 of unbilled time in September. The thing about work in process is I don't use it simply as a balance sheet tool. I use it as a management reporting tool as well, especially when we have billable time overruns. And why not equally use work in process for write-off accounting as well? All of you know that you can write off billable time in projects, and why not account for billable time that you've written off in projects? And you can only do so when you're using the work in process tool. And I also like to post good work in process, not bad work in process. I've run into agencies before where if it's a $120,000 project over 6 months, they may incur $60,000 of unbilled time as of September, the first month of the 6 months, and they post the entire amount, knowing full well that this is a train wreck happening. They will hit the 120,000 by Thanksgiving, and then everything else after that is done for free. Meaning that they really have to pay attention to the time that they rack up on the job and the time that they have to write off on the job throughout the entire 6-month process. The same agency that I'm working with right now would not only recognize revenue at the end of the 6-month project period, but they would also do the entire write-off at the end of the 6-month project period. Meaning the train passed by 6 different stops, never once rested, and then it's incorrect to show write-offs like crazy in the month of February when they should have happened back then while they were posting work in process. Another key area of work in process is production costs. Everyone knows that when you post a vendor cost to a project, the accounting entry is going to be debit cost of sales, credit accounts payable. If you do nothing with this, there will be a cost in a period, and if you don't bill that particular cost in that particular period, you're not going to have any revenue to match with the vendor cost in that particular period. We have a matching concept violation, and perhaps the next month you decide to bill the production cost. Post that particular production billing with or without markup in the following month, and then you've got billing in 1 month and you've got costs in another month. I've actually seen an advertising agency choose not to turn on work in process, Birgitte, keep a spreadsheet of the out-of-pocket production costs on Excel, do a journal entry at the end of each month. And I asked the question to the director of finance, and the response was, "We've always done it this way." And I said, there's a better way. There's a way for you to save a shit ton of time and be really accurate about the posting of production. So that certainly helped the client in question. Unbilled media costs are also part of work in process. For those of you that do post-billing of media and not pre-billing of media, sometimes you just don't get the billing out on time for the month in question, and it might be another month for whatever reason. If it's an unbilled media costs, it's treated the same way as unbilled production. The minute you hit that accounting for the unbilled media costs, you're going to go debit cost of sales media and credit accounts payable. You always want to make sure to match that media cost with a media billing in the same period. And if you don't bill it in that particular month, you apply work in process. I've been advocating project initiation fees to all of my clients, anywhere from $100 to $500 every time a project is open. There's no vendor cost associated with that. There's no billable time associated with that. It's a charge that you add on as a miscellaneous cost, because in the olden days, when we used to carry our dockets around, we used to have the creative brief in there, the job specs in there, images, memos, et cetera, et cetera. And back then, we used to charge $50 to $100 as a project initiation fee. The same thing happens today, where a job may be opened up electronically today, but it's going to travel a number of paths, have a lot of communications associated with it, and even be managed by a project manager. So why not have a project initiation fee? There are no vendor costs or employees associated with these miscellaneous costs. And if for whatever reason the client refuses to pay it, at least you can track it as a written off miscellaneous cost when you post work in process, as well as when you write off the miscellaneous cost. The concept of work in process in the advertising world is absolutely, absolutely critical. And recently, I was reviewing the audited financial statements of the 6 large multinationals, and strangely enough, or oddly enough, they all post work in process, because they want to make sure that they recognize revenue in the period that they have earned it. Moving on, issue number 2, deferred revenue. I have seen any number of clients use the advanced billing tool in the program, which is great. We all love, love, love the client's money up front. And I've actually seen the wrong thing happen, where the large advanced billing was pushed out in the form of a fixed fee and posted straight to income, which is not correct. You want to post an advanced billing as a pure balance sheet entry: debit accounts receivable, credit deferred revenue. You, as the finance person, are 100% in charge of reducing that deferred revenue based on what billing happens through the system. But you also should be taking care of or reviewing your deferred revenue every month, as often as you are looking at work in process every month. I have a client that I will do, I'm a part-time CFO for, and we review the month end every month, and they have a large advanced billing dating back to August of 2024, and it was $250,000. The reason for it still sitting in deferred revenue was that their client quit, bringing in another employee for the marketing department, and the marketing department person just didn't know anything about the 250, and there it sits. My recommendation to them was to have it sit for yet another year before they did anything with it. But that is, do not take that money into income until you've actually earned it issue. So when project management and accounting go about reviewing their deferred revenue numbers as well as their work in process numbers, they go hand in hand. And it is important to ensure that your deferred revenue numbers are accurate, and each and every month you have a number that you effectively owe back to the clients that you are very confident about. Incidentally, just a sidebar on work in process again. I've run into a number of agencies that have not turned it on, and I've gone to the work in process module and pulled up a number for these people to take a look at. And one agency that I've returned to work with that's been on the program for 20 years. That's a lot of loyalty, by the way, Workamajig. You got a 20-year client. Had in excess of $1.3 million in unbilled project costs sitting on their records. It has taken them 2 weeks to clean all of that up, and they are very confident that they are with a proper work in process number moving forward. Key management tool tied to deferred revenue. Number 3, for those of you that pre-bill media, either through Bionic, Gale Force, Strata. For the people that are in the accounting department, pre-billing media, we all know about the four-legged accounting entry. For those of you that are not pre-billing media, that four-legged accounting entry is, let's use a gross media buy of $100,000 and the commission is 15%. The four-legged entry will be debit accounts receivable, $100,000, credit media revenue, $100,000, debit cost of sales media, $85,000, credit accrued media liability, $85,000. The second largest hornet's nest of cleanup that I run into is the accrued media liability account. A lot of agencies don't pay attention to this whatsoever, and I've gone in there and taken a look at the subledger detail and found unreconciled, outstanding accrued media liability amounts going back years. And the answer typically is, Vince, we don't have the time to take care of this. And there lies this liability that may not exist, is still waiting for a vendor invoice, or has had the vendor invoice not applied to the insertion or broadcast order and gone straight to the income statement, stranding this media liability. The program has been amazingly written for the advertising industry. And I can't say enough about this, the IT people to really zero in on these unique transactions. And how many programs out there outside of the ad industry do we have that create four-legged accounting entries? So receivables, well, I'll get to that in a minute. But in terms of ensuring your accrued media liability account is current, always take a look at that. And incidentally, there's a little tab at the very top that says balance per general ledger, balance per accrued media liability. The two of them better agree to the financial statements. I'm sorry, the balance sheet or the trial balance. Incidentally, number two above, I've actually seen deferred revenue as a subledger. For those of you that don't know what the deferred revenue screen is, you go to accounts receivable, and on the very, very bottom, you can choose to take a look at the receivables themselves or to take a look at the unapplied billings themselves, which is effectively the deferred revenue subledger. And in doing so, that subledger, and I'll repeat this, the deferred revenue subledger or the advanced billing subledger also better agree to the balance sheet or the trial balance. If not, because it is a control account, there's a 100% chance that somebody mucked with it via a journal entry. I could say the same thing with work in process, which directly ties to the balance sheet. I could say the same thing with accrued media liability. It is very likely a journal entry has gone into that GL account to throw the subledger balance off from the general ledger itself. So that was number three. Number 4, 5, and 6 are a little bit of motherhood, but they deserve attention as part of the 6 items today. Accounts receivable is motherhood. Everybody knows that you can get a subledger. Not everybody is aware that it can be out of balance with the general ledger, and the program on the upper left-hand side in today's accounting can show you if the subledger is in balance with the general ledger. And not only that, if you're out of balance, you can take a look at when you became out of balance by pushing that little button, and a hyperlink will send you to the date in question. The thing about receivables is constantly take a look at them, and if you need to provide for an allowance for a doubtful account, this is accounting 101 as well. And if a receivable is sitting out there at 180 days for, let's say, $25,000, we may, as conservative accountants or people that want to make sure that our reporting is most accurate, allow for a $25,000 bad debt expense. We don't write the 25 grand off in the receivables, but we would create a contra account called allowance for doubtful accounts for the $25,000 in question. Are we just being prudent? Absolutely. If you want to make sure that your receivables are clean and tie to the balance sheet, that's one thing. But from a professional judgment standpoint, if you see that a client is getting older and older and older with this receivable with you, I have this saying in the advertising world, the longer a receivable gets uncollected, the more likely it is not going to be collected. So that was number 4. Number 5. Number 5 is a significant favorite of mine, and it's accounts payable. It's easy to post a vendor invoice and look at a 30, 60, 90 and make sure that it reconciles with the general ledger on the top left-hand side in the accounting module. But how do we know that we've captured all of our payables, especially when we've got lunatics, creative people, project managers, worse, people that buy stuff on behalf of the agency and they don't want to tell you about it and they stick it in their left drawer, or worse, they stick it in some folder. And you don't find out about it until the vendor knocks on your door and says, Bob, how come I haven't been paid for this $19,000 photography invoice? And as a result, and I'm sure this has never happened to any advertising agency, so I suppose I'm just talking to myself. As a result, I'm a big fan of purchase orders. And we're not talking about purchase orders for Adobe subscriptions. We're talking about if it's connected to a project, if it is large, like a brand new laptop computer that's going to be for a new account manager. If it's a significant purchase, I would certainly utilize a purchase order to make that contractual commitment to the vendor, so that when the vendor invoice does come in, you can actually match it to the purchase order and you have more assurance that you've data captured all of the payables in question. And once again, I can't thank Workamajig enough for having purchase orders available in the system. And that way it effectively nails down any material vendor costs that may be lurking out there when you do either month end or year end. And with it being the 25th of February, I suppose most of you are finished with the December year-end reporting at this stage. This is a great time to focus on the 6 key balance sheet items moving forward for 2025. So for those of you that haven't used POs yet, let's just make sure that when you do start using them and the vendor invoices come in, we want to match those purchase orders to that vendor invoice in question. And does Workamajig have that facility? Absolutely. Number 6. Some of you may roll your eyes at this. Some of you may say, well, yeah, we do it from time to time. I harp on the owners of an agency big time. I have just been part and parcel of a fraud in this industry in the last 3 months. The owner never once looked at bank reconciliations that the director of finance was preparing. Never mind the fact that the bank reconciliations were not being prepared on a timely basis. And oddly enough, this director of finance was siphoning money out of the company. And I am a firm internal control individual to make sure that owners, when they get their reporting package, also not just receive these first 5 key balance sheet reconciliations, but also the bank reconciliation. How many owners are truly in charge of the bank account? Mostly it's the finance people that are in charge of the bank account. And this is exactly where this internal control is not in place. At the very least, have the owner review the bank recs once a month. Some of you may be so astute as that you are performing the bank reconciliations weekly or daily because you're able to download the banking transactions from your bank and go and update your Workamajig bank balance and the GL up to the day. That's great. Some of you may have tons of bank accounts because you carry media, you've got client deposit money. It is your fiduciary responsibility to be tracking this client money, not necessarily in the operating bank account, but really, I have this one client on the East Coast. They have 3 principal clients. They have 4 bank accounts, an operating account, and really almost a client in trust bank account for each and every one of their other clients. They're 3 large clients because they collect a lot of advanced billing money in there. They only move money from those particular so-called trust accounts into the operating account when they've earned it. Yes, if Esther, you're controlling this, anyone having any questions, just keep sending the questions through the chat, and happy to answer those questions in the meantime. So to finish on the bank reconciliation issue, the fraud was pointed at the director of finance. That person was fired. And I said to the owner, so how did you feel about this expensive experience? And the owner said, yeah, it was equally on me as well. And we have this phrase in the industry called desperate people do desperate things. That executional part of the fraud was one thing. The not reviewing the 6 key balance sheet accounts was another thing. That being said, when you have these 5 working capital accounts nailed down, and if you don't have a really funky, busy balance sheet, you have more assurances in your income statement from a reporting standpoint. Some of you may actually have to explain some of these 6 key items to the owner of the company, but it's more for them to have the assurances that the income statement is clean. There are a couple of other associative things relating to these 6 items, and one of them has to do with cutoff. We want to make sure that when we are looking at our income statement, especially for those of you that are earning media dollars and your gross billing clients as opposed to just billing them for commission, that we compare the media type in question from a billing perspective to the cost of media from a cost perspective. So if you've got digital media billing, you should have digital cost of sales billing so that you can eyeball the related margins in question. If you do have a net media margin that is negative, you got a cutoff issue. And that we all know that we can go into the income statement and drill down into the billing side, or we can drill down into the cost of sales side. But rarely should you ever have a negative AGI related to a media type, unless you like doing media for free and you say to the client, we'll spend our own money, create all kinds of media billing that's nowhere near the cost of media. I don't think I've ever run into an ad agency like that before.
Hey, Vince, we do
Yes,
have a couple of questions here that I thought maybe we could go ahead and take the time
let's do
to
it.
answer.
Yep, let's do it.
So the first one is, hey, Vince, hope all is well. Joe is asking a question. We would love to have POs mandatory in Workamajig as an option. Is that a pipeline for enhancements? And I think that would probably be more of a question for me than it would be for you. We could probably set up a sort of transaction preference that if the that POs might be required for any project related expenses. That would be kind of the way the enhancement would have to go, because I'm assuming you don't want to assume that there's POs necessarily always for overhead expenses, but I don't know. I mean, would that be across the board? And maybe Vince, that would be a question for you. And we could then kind of come up and design how the enhancement suggestion could be submitted.
I prefer mandatory POs, especially for the person that's doing the buying. And this is not just a software question, it's more of an internal control question as well. If I was the owner of a $15 million shop, I'm talking AGI, and I had a vice president of production services spending my money on my behalf, I would probably want to have it mandatory for that person. I think a related question though is, Birgitte, do we have it by position from a PO authorization standpoint, or if anybody wanted to buy something, would they have to go through the whole setup process as well? So I'm actually firing back a question with a question.
I was going to say that would be more the question to me on expense reports. I can see it for overhead expenses. I can see it for project expenses. Once you start getting into expense reports, would we exclude that? So maybe it's more by type. I don't, we'd have to kind of define how we want to submit the enhancement.
Well, and the worst part of expense reports and credit cards is that the horse is bolted big time.
Right,
And more people I see are moving away from expense reports, and they are being given company credit cards. Hey, there's
right,
one client, they've got 36 company credit cards. And I thought, oh, there's a fantastic way of cost control,
right.
but the owner can't be talked out of it.
Well, and that's the other thing with credit cards. You have Facebook clicks, all the social media. It's difficult when you get some of those credit card charges to come in. Would the PO, which is really project related, but it comes in more as an overhead expense, would that require a PO? So, Joe, maybe you and I could chat offline and kind of define how you would consider setting that up. And for those who might have some opinions on that, I I think the whole reason it wasn't ever allowed to be a mandatory item was because of the fact that you get into those gray areas with credit card charges coming in for social media. You have expense reports where somebody had to travel. Did they now need a PO to get that done? Or they just did, some meals and now suddenly there has to be a PO related to the item. So, um,
I'll add to that, Birgit. I think all of you may want to, particularly now that December 31st is over, you may all want to take a look at the issue of cutoff. What I mean cutoff is what happened the following month that should have impacted the previous month. And is it a culprit? Is it the type of spending? Is it the type of project? Uh, in the event management business, they spend a lot of money with upfront costs. And this one agency, they don't even do POs. And I go, you must have incredible cutoff issues. And the guy said, yeah, we do. And I go, why aren't you using POs? Well, it'll be tough to teach. And I thought, oh, this looks like another circus act where there are different lunatics in this asylum. So while there's a strong argument for POs, part of this also has to be taught to the people using the purchase orders by saying, we're not making this mandatory because of ABC. We're making it mandatory so that our accounting improves significantly, and we've got internal controls in place that we're not spending any more money than we have committed to with the vendor. That actually needs to be taught, by the way, Joe.
All right. Next question. Is there a way to utilize WIP for expenses only and not time entries? We have a hard time tracking when phases go over budget in real time, so write off of all overage at the end of the projects. Now, I do know that you can track WIP for expenses only by setting your WIP labor in and out accounts to just go in and out. It doesn't actually, it tracks it, but then it tracks it right back out again. So that's kind of our workaround for those who don't want to track uh, WIP for labor.
Um, I totally hear you, Brigitte. I think I'm going to fire off a question with a question.
Mhm.
Do you want to fire up work in process for production costs? What is your rationale for not posting unbilled, good, clean unbilled time, by the way? Because unless is it a fixed fee that you're pushing out and you know that it's going to be the same amount of revenue that you earn every month, and so why not just hit mark as billed with the time? With respect to Birgitte's workaround, Birgitte, different question. I get your workaround. I've seen it before from an accounting perspective, but if I pull up the work in process subledger, I should still see the unbilled time. No, I won't. It's zero.
Correct.
I just answered my own question. So I have a question to the question, because maybe, just maybe, your agency does a lot of production work and not so much billable time work, maybe? It's an open question.
Right.
Fire away with another question, Brigitte.
I was going to say that was it for the questions at this point. I did kind of want to take a moment while we're at a pause to kind of reiterate some of the things that you were talking about with pre-build media, advanced bills, WIP closing, and that type of thing is really yes, the balance sheet and everything that's in it is important, but is everybody doing what they need to do to make sure that that balance sheet is reading correctly? Like, are you making sure your AP, your AR, your advanced bill on applied account, your pre-bill accrual account is all balanced to the balance sheet? And like you said, no journal entries going in to kind of mess things up. Are projects getting closed in a timely period? And are you reviewing your WIP analysis report so that you don't have transactions that should have been marked as billed, or the project should have been closed and they're still sitting in your WIP? Are you using POs, and are they getting accurately linked to those vendor invoices and closed, so that we're not sitting there thinking we still owe vendors something when we don't? And then two, I think the big thing is the pre-billing of the orders. When they don't get linked accurately to vendor invoices, or they don't get marked as this is the last invoice, and you have those trailing pennies and dollars that we're never going to get another vendor invoice for, are those getting closed and reviewed? And if you're doing these things monthly, then you can have more confidence in that balance sheet and income statement of what's going in, if you do those things on a more monthly basis to keep track, rather than finding out that at the end of the year you're suddenly out of balance, and you've been out of balance, for a year or so.
I'll add to that as well, Brigitte. I have run into agencies that when they change the project status to a status that they've created called closed, that does not close the job. You have to actually go into the accounting tab in a project and actually hit closed.
Right. I do think that those month-end procedures are not being very adhered to as much as I would like. And then the owners and the executives are receiving their balance sheets and everything, assuming that the information is accurate, when the original month-end procedures aren't really being followed. We do have a couple more questions, Vince.
Okay.
Angie's asking, how many agencies overall do you see using WIP currently?
Less than 30%.
I was going to say I would even probably make that lower,
And
because out of the majority of my clients, I would say a small percentage
Angie, when
uses it.
I work with 4 other software programs in the industry, Advantage, eSilent Partner, Clients and Profits, and Deltek Workbook. They all treat work in process differently. And I look at this as an opportunity for you from a management reporting standpoint, not just purely a balance sheet posting standpoint. And I'm saying it in pure accounting terms, not software support terms, not um, in general terms. We are a unique industry. The program was written to have this, and this is not an enhancement, but this is a significant contributory tool to be able to manage your business better. Why not have, I've got a client, beautiful example. They turned on WIP, helped them implement $4 million shop. They made 25% profit in 2024. Very respectable. In addition to that, we posted WIP and the related write-offs to this agency, and they had $1.2 million in billable time write-offs posted into their income statement. I said, Bob, so how did you feel about 2024? And he said, sick to my stomach. They effectively wrote off as much money as they earned last year. And Bob said, if I would have made 1.5 million and written off 500 grand, I would have been happier about that. So, Angie, um, consider not the population not using it. I'm trying to enlighten people about how important this reporting tool is. It works absolutely fine. You just have to understand the accounting entries. And what a wonderful way to take a look at a work in process subledger and go, I have $350,000 sitting out here that's 120 days old. No one has told me about this. You now have a line of sight. You can't get that in the project management reporting. You can get that in the accounting reporting by using work in process. And Birgitte knows I'm passionate about unbilled time and production and media costs. Any more questions, Birgitte?
Yes, we have one more. Wishing to remain anonymous. Suggestions on how to start using WIP. Their AR is out of balance and their AP has been out of balance for many, many years. And they feel like they're too far gone. Now, my thought is
No,
nobody's ever too far
nobody's too
gone,
far gone.
and it's always a good time to start, especially when we start looking at the first of the year. Great time to suddenly say, well, let's clean out the old and start with the new, and got to
Yeah.
start somewhere, right?
So I'm going to humbly say that there are approximately 9 Workamajig consultants, and quite oddly enough, I am the only CPA in that pack of people. And I have I would say, a long-standing relationship with the support people. What I would typically do in that situation is spend a day or two going through the database and then giving recommendations on the next steps thereafter, including showing you how WIP works, turning it on, posting it, showing you what it looks like, unposting it. By the way, WIP is your friend because as fast as you've posted work in process, you can unpost it, clean up more projects, repost it until it actually looks legitimate and bona fide. Over the years, I've actually spoken to Birgitte and go, wow, this horror story did this, this, and this. I think we should do this. And she has offered up a couple of other suggestions. So we don't just do it independently. And I would do it really from, there's a favorite television show that I love watching from Los Angeles. It's called SWAT. And I would do it from a tactical standpoint and hit those balance sheet accounts accordingly, SWAT-like, one balance sheet account at a time. What you would learn from this is how the program works, how things reconcile, tie in, and ultimately learn to be confident and believe in your income statement.
And I think for me, for those clients of mine, know I love to say this statement, you know, you eat the elephant one bite at a time. And that would be the same thing with any out of balance issues and starting to use WIP, whatever part of the system. Let's begin somewhere. Let's start the cleanup. Let's start the setting up and the process to keep that account clean and moving forward. And before you know it, you're balanced all the way around. So,
And let's not just look at this from a processing standpoint, you guys. It is an accounting conversation we have largely had today. So if you think that we haven't turned this on or haven't turned that on, I'm just turning things around 180 degrees. We've got a wonderful software program. It will help you, not hinder you. And were you not hired to be the financial accounting manager or the client accounting manager or the director of finance? Well, then use the tools that you've got available to you to have some spectacular financial reports each and every month end. Boy, that was a big plug for Workamajig, eh? Worky.
of course. Um, Okay, so Anonymous still says, would my normal support person be able to help, or do I need to request Vince? Would this be included in the normal support package? So I'll answer, because obviously you're always welcome to hire Vince, but yes, you can reach out to your normal support person and set up some calls and just start to tackle, how do we clean this up and how do we get our accounts balanced? What do we need to do? And then, of course, how would that setup look if you wanted to test out what WIP would look like?
And my answer is I've been an ad agency consultant for 38 years. I don't just look at things from a software perspective. I look at things from an agency, finance and accounting, and software perspective. So you effectively get three heads at the same time. And it may not just be the cleanup of things. It could be reviewing your external billing rates. It could be reviewing how your estimating is going. Yes, I charge on an hourly rate, and I'll do my best to give you an estimate once I've taken a preliminary review for a fee, of course, as well, and go from there. What you have ahead of you is an incredible education and learning process ahead of you, Anonymous. Does that come with a capital A or a lowercase
Capital A, of course. Lower attendee, though.
A?
All right. And I was going to say, I had a client who used Workamajig for many, many years. They did not use our accounting side. They had another, I won't mention the name, the two-letter initial, that they used for their accounting. And one day they wanted to switch over to using Workamajig. It took us about a year of working back and forth. Because she had a lot of old stuff in Workamajig where they never got the receipts in. Sometimes she invoiced, sometimes they didn't invoice, and but she didn't worry about it at the time. And then over time, we actually got her fully incorporated into Workamajig's accounting. We got everything cleaned up, and she's been balanced ever since.
For those of you that are even remotely using QuickBooks in association with Workamajig, you are spending a lot of time in a software program that you've got to enter in data into QuickBooks for it to do what you want it to do. And the program QuickBooks doesn't handle accrued media, doesn't handle deferred revenue, doesn't handle work in process. So why are you, and it's probably because the devil you know is better than the devil you don't know. And I'm saying this is a good devil where you've got all you need to from a Workamajig standpoint. And it will save you, not so much save you time, it will actually reroute your time that you're not being productive with into far more interesting reporting modules in Workamajig. And that ties me, Birgitte, to if some of you are using an outside accountant or an outside bookkeeping service to do that month end for you, these 6 balance sheet accounts, I mean, present them to these people and see if they even understand what you're talking about. Because again, the ad business is a funky business from a reporting standpoint.
Completely agree with that one, Vince, because I've seen where some outside accounting firms will have them fix something with a journal entry. And
100%.
they'll come in and put the journal entry in and say, well, that's what my CPA told me to do to fix this. And I'm like, well, that didn't close the invoice and you're now out of balance on your AP or your unapplied advance.
Birgitte, oddly enough, I still run a CPA practice out of Toronto for Canadian clients. And I do a lot of work in the US. The majority of my consulting is in the US. And when you have that external CPA having their eyes and hands on the Workamajig database, they have but one consideration in mind, and it's called tax minimization. That doesn't help the finance person try and help run the ad agency with the owner. We are all about ad agency operations, ad agency reporting, proper balance sheet reporting, proper. We won't even get into client P&Ls or project P&Ls today, but it's a unique business that you got to put some time into this thing to understand what you're looking at. So taking it one step further, I've actually even seen accountants walk into posting journal entries into the cash basis of Workamajig. And all they care about is grabbing an income statement or a balance sheet or a trial balance from a cash perspective, mucking up the Workamajig database that you are working with every day of the week. So just give that some consideration. And I'm not discounting what that outside accounting service has for you. They are not helping you from an industry best practices perspective.
Very good point. Cindy has a comment. She says she totally agrees. When we first started using Workamajig, we also used QuickBooks. And when they made the full switch to Jig for accounting, it was the best thing. It did take a lot of work and time, but it was well worth it. So awesome to hear that, Cindy. And I know, Vince, we're needing to wrap this up. I know we got started a few minutes late, but hopefully this has been a worthwhile webinar, and even with our shaky start.
Thanks, Birgitte. And for those of you that want to reach out privately, you can find me online fairly quickly, but it's my website is vincentdong.com. And I have an extremely dry sense of humor. Boy, was I ever polite today in today's session, Birgitte.
You were very good. Only one little word in there.
Yeah,
And I didn't even bleep you out. So
yeah, yeah.
all right. Well, if anybody does have any questions, you can always reach us at support@workamajig.com. The recording will be posted on our help guide link. If you would like information regarding Vince, we can always provide you that information too. Otherwise, you can go directly to his website. Hopefully this was helpful. And if you guys do have any feedback, we'd love to hear that. Would you like to see more types of webinars like this? Where it's more conversational and we're, doing more of a discussion type of thing with best practices, please let us know. We're, looking for feedback on what kind of webinars you guys would like to see in the future. So again, thank you very much, Vince, for all of your insight and information into this. And I appreciate all the attendees sticking with the entire webinar. It was great speaking with you guys.
Okay, all. Take care.
Thank you. Bye-bye.